Now joining us for our Kenya market update is Eric Musau, research analyst at Standard Investment Bank. He's with us in Nairobi. Eric, good morning to you. This reports that declining interest rates are driving investors back to the stock market. Are you seeing these people trooping back in the stock market?
Yeah, certainly. We've seen local institutions starting to look at equities a lot more keenly. And that has been the trend over the last couple of months. If you look at what has really driven this market, it's mainly institutions starting to look at the market. And high net worth investors have also been quite active in the market. So overall, we are seeing this momentum back into equities.
Might that explain why the market closed on a high yesterday, almost 18 points, despite some sad news on the political front?
Yeah, I think the sad news over the weekend more or less weighed down on volumes. Volumes were down over 40%. So we didn't see a lot of activity. So the net index was up, but it was really on very low volumes.
Let's talk about James Mwangi, the CEO of Equity Bank. He's obviously on a high right now, just being named the Ernst & Young World Entrepreneur of the Year. And one of the craziest ideas perhaps to come out of him, some might say, is he's thinking about going into Somalia.
Yeah, I think somebody might underestimate Somalia, and somebody trying to see opportunities now in Somalia. I think if you look at the stabilization program that is going on now in Somalia, there are a lot of opportunities. Obviously, a lot of challenges as well. But with any country that is coming from which is under reconstruction, there are opportunities despite the many challenges. I think he's probably looking at that. He hasn't really given a timeline yet, but I think it's an interesting thought, also providing for the rest of the companies that are in Kenya that might be looking at that market.
In all fairness, James Mwangi has been called crazy before. When he started banking the lower end of the segment and going to places like markets where ordinarily banks are not to be seen. And the second point is Kenya has an invested stake in Somalia. Kenya midwifed the peace process, fragile as it may be, but there's no Kenyan companies that have been brave enough to go into that market as yet.
Yeah, we've not seen companies actually setting up a presence in that market. But if you look indirectly, we know BAT exports into that market. We know Car in General, for example, sells some of its products, motorcycles, small engines and so forth into that market. So if you look at a combination, Kenyan companies have actually been doing something there. If you look at cement, for example, in small quantities still. But once you have some sort of stability, I mean, it's possible to actually establish a presence. I mean, if you think about it, Coca-Cola is actually in Somalia, so it's actually a location which, with good stability, you can actually establish presence and actually make profits.
And Somalia has also in the past indicated that it might be interested in joining the East African community. Let's talk also about CMC Holdings. Some minority shareholders now petitioning the board to hold an annual general meeting within the next 1 month. There's been a lot of controversy in this counter. What do you make of this?
Yeah, I think the shareholders are probably getting a little bit jittery. The share has been suspended for quite some time now. And I think that deprives shareholders of being able to have some sort of liquidity on their investment. I think that's why they're very keen to petition the CMA so that the decision can be made and all things resolved and the company relisted back to the exchange. So I think it's a fair call on the part of shareholders that to have also a meeting and sort of iron out all these issues, and then have the company back on track.
Is it better perhaps at this stage, considering the amount of controversy just there has been and bad blood, to delist the share and get it out of public domain? No, I don't think so. I think already the directors are in place. We've seen some resignations. If the shareholders have another meeting and new directors are elected or a fresh mandate is given to existing directors,
or the CMA sits down with the board and clarifies some of the issues which have been raised with regards to corporate governance, I think the company would get relisted back, and shareholders at least would be able to maintain the value of their company. Delisting really would not solve the problems and would actually make the shareholders move in a far much worse negotiating position.
If you ran into Finance Minister Njeru Githai in the corridors right now and he asked you what to do in this year's budget, everybody touches the same taxes, cigarettes and alcohol. Would you suggest that?
We think there might be a tax, especially on non-alcoholic beverage, and that has probably been as a result of very strong volume growth. I mean, if you think about it, the finance minister has to raise quite a bit of money, and he has to be careful not to stifle growth, but at the same time raise the desired amount of money so that we don't have a very significant borrowing program for the upcoming year. We've also had the health sector lobbying quite hard to have higher taxes on cigarettes, because cigarette demand has actually been growing despite higher taxes last year. So that might be an area that the government could still be looking, but I think it would be a fine line that the finance minister will be walking this Thursday.
Let's talk about the pay TV market for just a second. A new Chinese player entering this market, Star Times, competing of course with MultiChoice, which is well established, and Wananchi Group's Zuku. What do you make of this development?
They are entering with a different technology. I mean, they're using now digital transmission. If you look at Wananchi and DSTV, they use satellite broadcasting. Already the Star Times has a presence within East Africa, and coming into Kenya would be really to consolidate that East African presence. If you look at the technology they're coming in with and the migration between analog to digital, we think they might have a better chance in the Kenyan market compared to some of the other pay TV providers who've had to fold up after starting initially with a great aggression.
For us, it just means there's more ways to watch CNBC Africa. No. Finally, let's talk about, we're expecting results out of Kenya Airways in the next few days or weeks. What are you seeing if you had a crystal ball?
Yeah, the results are due this Thursday. We had our own estimates of about a 44% decline in profits. But I think the market has been a little bit jittery, probably thinking, there might be a lot worse than that, because they already issued a profit warning. So I think the best case scenario would be to see a decline which is not too significantly. If we don't see a loss, I think we'd be very happy with the stock, because we know going forward we'd really be looking at a great recovery. So I think the best case scenario this Thursday would be really to see, at least the airline posting a profit. I think the market would be pretty happy with that.